Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 12th, 2025, and we're diving into Xenon's second quarter 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Xenon is a fascinating company, especially with its focus on neuroscience and the development of therapeutics for epilepsy and neuropsychiatric disorders. I'm excited to discuss their latest financial results and business updates.
Revenue and profitability overview. Let's start with the financials. Xenon reported a net loss of $84.7 million for Q2 2025. Can you break down the key factors contributing to this loss?
Certainly. The primary driver of the net loss was the significant increase in research and development expenses, which rose to $75 million. This increase is largely due to the ongoing Phase 3 clinical trials for azetukalner, their lead candidate for epilepsy and neuropsychiatric disorders. Despite the loss, Xenon maintains a strong cash position with $624.8 million in cash and equivalents, which should support their operations into 2027.
Clinical development and strategic initiatives. Moving on to their clinical development, Xenon has made significant progress. Can you elaborate on their recent milestones?
Absolutely. Xenon has completed patient recruitment for their Phase 3 XTOL2 study, which is a major milestone for their azetukalner program. They're also advancing their neuropsychiatric studies with the initiation of the Phase 3 XNOVA3 trial for major depressive disorder. Additionally, they've started a Phase 1 study for their NaV1.7 candidate targeting pain management. The appointment of Darren Klein as Chief Commercial Officer is also noteworthy, as he will lead the commercial build for azetukalner's anticipated launch.
EPS forecast and market reaction. Analysts had forecasted an EPS of $1, but Xenon reported an EPS of $1.77. How has the market reacted to this miss?
The market reaction has been mixed. While the EPS miss is a concern, investors are also focusing on the long-term potential of Xenon's clinical pipeline. The company's strategic initiatives and strong cash position provide a buffer, but the increased R&D expenses have raised some eyebrows. Overall, the sentiment is cautious optimism as investors await further clinical trial results.
Operational efficiencies and future outlook. Looking ahead, what can investors expect from Xenon in terms of operational efficiencies and future prospects?
Xenon has shown strong guidance, particularly with their cash flow management, which is crucial given their high R&D costs. The completion of patient recruitment for key studies and the initiation of new trials are positive indicators of their future prospects. However, the high R&D expenses remain a risk factor. Investors should keep an eye on upcoming clinical trial results and any regulatory updates.
Key takeaways. In summary, Xenon's Q2 2025 results reflect a company deeply invested in its clinical pipeline, with significant R&D expenses leading to a net loss of $84.7 million. However, their strong cash position and strategic initiatives provide a solid foundation for future growth. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Xenon's performance and prospects.
Thank you for watching Smart Stock Watch. If you found this analysis helpful, please like, share, and subscribe to our channel. We'd love to hear your thoughts on Xenon's performance in the comments below. Until next time,